Hello and welcome to USAReverseMortgages.net, brought to you by iReverse Home Loans. My name is Brandon Webb, and I'm your reverse mortgage expert. Today I'd like to just make a really quick video to talk to you about predictions for 2016. We finally made it. We're a little over midway through January, and New Year's often bring new rules, regulations, just new happenings for all types of things, including reverse mortgage. So I really just wanted to go over two major pieces. One of them is the financial assessment, what's been going on with the financial assessment, and two is rates. So rates in the coming year, obviously no one has a crystal ball, but it seems as if they will be going up. Probably very slightly. In an election year, rates normally don't go through the roof, but you never know. But with the Fed backing off, keeping rates low, they may start to float up just a little bit. That doesn't mean that you will necessarily get less money out of a reverse mortgage, at least not until rates start to go up substantially. Okay, so that's just something to keep an eye on. If you're looking into reverse at all, please feel free to call me, ask me about interest rates and how they work, because reverse mortgage interest rates work a little bit differently than regular mortgages. You have fixed and adjustable, just like a regular mortgage, but there are advantages to taking adjustables over a fixed. Mainly that with adjustables you have access to more money and a line of credit. With a fixed rate, you don't get a portion of the proceeds you get with an adjustable, and you also have to take all funds up front, cash out. Okay, so you're getting charged more for doing it that way. So rates are always good to know what's going on with them. The other thing I want to mention is the financial assessment. We've now been under the financial assessment for quite some time now, since April, the end of April of 2015. And to some extent, the financial assessment has really done what everyone said it would do. It does seem to be legitimizing the product a little bit more, in the sense that people like financial advisors or even family members who may not have thought the product had stringent enough guidelines to make sure that people were paying their taxes and insurance. They now have that safety blanket because lenders are taking a much closer look and underwriting the loan in a way similar to regular mortgages. They are looking at things like debt-to-income ratio, residual income, how much money you have left over after paying your bills out. They're doing these things to determine if they need to give you a LISA, a lender-enforced set-aside. That's a set-aside, they take part of your proceeds and put it aside for you to pay your taxes and insurance. There is a full LISA and a partial LISA, and your credit history will determine which one you get. So, the financial assessment is, here to stay, and it keeps on trucking. We don't know what kind of tweaks will be made to it, but so far it has helped, make the product look more legitimate to people who were concerned about it in the past, and it is really making sure that you'll be able to meet your payments, make sure that you can pay those taxes and insurance. One side effect, though, is there are a lot of people who in the past would have qualified for a reverse mortgage. They were over 62, they had some equity, they lived in their home, that will not now because of that income. They may be living on a very small Social Security stipend and have a lot of bills going out. The lender may determine that they need to be given a set-aside. Now, the reverse mortgages, even with the new financial assessment, would be approved for someone who does not have a good credit history or a history of a willingness to pay, is what they call it. It'd be given to them, but they would be needing to take that set aside. For some people, that might make the loan not work if there's not enough equity there. They wouldn't have the room to set aside $30,000, $40,000 to pay taxes and insurance for X amount of years. So there are people who are not qualifying for them now. It's a good thing to call a reverse mortgage expert like myself and go over your particular situation. We can do things like pull credit, look at your credit history, look at collections you may have or charge off, things like that, and explain how they can affect your ability to take a reverse mortgage. There are a lot of unique situations where you need to talk to somebody if you put your income into an S corp, you're a real estate agent, something like that. That can affect what lenders may or may not approve your reverse mortgage. So, in 2016, the basic message is the financial assessment is in place. It seems to be working. It is allowing less people to take reverse mortgages, but is illustrating to people that lenders care about what happens to borrowers after they take the loan. They want to make sure that they don't default on the loan by not paying taxes and insurance, your property taxes and your property insurance. That's the way to default on a reverse mortgage since there's no payment. So they want to make sure you're going to be doing that. Again, rates do have the opportunity to be rising a little bit and should be monitored. Reverse mortgage rates are a little bit slower to move traditionally than regular mortgage rates, but they definitely do, and it's definitely something to talk to a reverse mortgage loan officer about. So we do expect volume to continue. Once the financial assessment was introduced, there were several loans that were still fitting in under the guidelines before it was implemented, and then those ones all came out and closed, and then we were stuck with all these loans that were brand new financial assessment loans, and things hit the skids for a little bit. A lot of the loans fell out because people weren't fitting into the guidelines, people weren't knowing what they were doing yet as far as underwriters, because it was all new to everybody, including loan officers and borrowers and underwriters. That's kind of come around the curve now, and we're starting to see volume really pick back up as people, now have been doing them long enough that they understand everything from how to underwrite it to how to produce the loan and fund it. So if you have any questions about any of this stuff, as always, please feel free to give me a call. I'd love to talk to you and earn your business and explain all the intricacies of the reverse mortgage. Thank you very much and have a wonderful day.